All right, everyone. In this one, I'm going to take you through taking a look at both the higher time frame and the lower time frame. Now, you could trade one chart or the other. You don't need to trade with both charts open, but there are some advantages to that. If you're trading the smaller time frame, which is here on the right, you could actually be watching the higher time frame in regards to taking profits. Now, on some trades, you'll end up, getting a break even or losing a few ticks than what you would have taken on the smaller time frame. But also on the larger time frame, it's a little less stressful. The movement's a lot more steady, consistent. And so, or the higher time frame, you're going to have a little more whipping and fast market movement. So depending on your personality, that could, be good or bad, right? But also, you'll be able to see how the spans, which you'll see, are pink, green, yellow, and blue, and same thing here, and they align the same with price because that is volume based averages. So so beyond that, let's take a look real quick. We do have some buy gaps and some OHLC, which is our open, high, lows, and closes. And so we'll take a look at that. We had a gap down. That's these big bars. This is the RTH open. So on the open, the market gap down to open right here, and these bars signify that gap. And so we had a little bit of a up bars, and then it made that first move down. And you can see over on the smaller time frame, you had this little double bottom. And of course, look how we were down in the red, under 10 on our oscillator, our extreme oscillator. And then we also got divergence with divergence here and on order flow, and a cross back up between our relative movement. We are under the Xroc, but being under the extremes down here, most of the time you get at least enough of a pullback for a scalp. Now, could this have turned around and run hundreds of points? Absolutely. But most of the time you're going to get a pullback, and so here on this first entry bar going to the upside, that could have been an entry. You're looking like 4 bars for a scalp, so 20 points on the chart, and so that would have been an easy move back to the open there. But again, markets move really fast in the open, so that might not have panned out so well. But as you can see, if you were looking at the higher time frame, you can see that it dojied right on the open here, and then it got a signal bar to sell short. And so that is a good opportunity there to sell short, and that's about a 100-point move there as the market moved down on the open. And so this happens pretty much every day, one way or the other. So you could really kind of create a plan off of that, and some days I catch these perfectly, and some days I'm late or it doesn't trigger my order, and that's business. But once the market made its move down here, now I did think this was going to be moving a little bit further, but you can see on our shorter time frame there that this market kind of made its little double bounce, and we had a double bottom. So that's what this orange value here, and it's telling you that you have divergence, as well as we have back down underneath our 10 on the extreme here, and also we have divergence as the market made its move up there. We made this double bottom. So, and we're above the Xroc, which is the white dashed line here, and this is the Xroc is our rate of change. So when that tells us, it's usually right. And so being above the Xroc here these are good spots to go long. And so that's be a good entry here on that first uptick bar or the second, and then you would hold for, you know, a scalp 3-4 bars. The interesting thing though, looking at the higher time frame, when the higher time frame turns over, you at least get 2 bars more, and so that's just the norm. And so when this starts printing, I mean, you could run this all the way back to the open. Now on the shorter time frame, you get these double dojis here, which, you know, isn't so fun if you're already in profit and you're sitting there thinking you're going to give it all back, and you know, and of course that emotional type of trading comes in right there. So, but again, the double bottom, the divergence, are reversal indication down there, looking at the Xroc, because our reversals is divergence above the Xroc, and that is our reversal. And usually it goes back to at least the yellow. This one went back to the orange line, which is quite far, but at least to the yellow it usually runs back to. And then on the higher time frame, most everything will come back to our 50 zone. So if we're in a downtrend and the market's moving down, and whenever it bottoms out down here, we will likely see the market move back to this midline, which is our 50 zone. And it doesn't mean much. Just the fact that at 50, that you have a lot of traders who were long or short on the opposite side, that they're looking to scale in to get out and so forth. So 50% of anything makes a wash for strong bulls or strong bears. So if the market moves 50% back, then you know that if they scaled in, that now they are out with their initial trade with the break even, and their scaled in trade actually in a good profit. So that's the norm for that. And you can see that we came across here and started getting above our Xroc. So whenever this turns up, you would want to buy. And these are short. The market went sideways for quite a while right here. So, and I think I said that on Friday, it's kind of tight. But whenever you see this, the shorter time frame over here is going to give us opportunity for those buys. And so let me scroll this over a bit, and we'll see. So here we had that double top right back at the open there. So back to the open, and you see on the shorter time frame here, we get a double top, we get divergence, but it didn't quite make it back under the Xroc there with the divergence, but it's still an opportunity because we already had one leg down. So likely any trader that was going long in here is looking for them to get out, and then any of these traders that were going short is going to need at least 50% of that move to get out. And it went a little bit further than that, and so that tells us that we should look, if we get a higher low, then we know that they jumped out. Otherwise this would have went through, right? And so we'd be looking for this to come back to the open and maybe breaking out if the bulls were strong enough to hold it. So again, down here there wasn't a whole lot of options in regards to taking a trade, but on a shorter end here, it comes up over our highway on the shorter time frame, but on the higher time frame we are bouncing right into it, creating a higher low or a lower high. And this is this area, and we got divergence in order flow. We don't really have divergence on our divergence indicator, but relative momentum has divergence. But not to say that that's a reason to take a trade. It can. They work out, they do well, but not always the greatest opportunities when you're thinking about it. So The market does make its move back down here, and you can see on our lower time frame we get double bottom order flow divergence, and now we have divergence on our green line, which is our convergence divergence indicator. So this creates a possibility. Also, our Xroc is now above 50, which means that now the rate of change is more on the bull side than the bear side. And so that means that the buying is a good idea, and that gives us this area here where you can see right here this little bounce. So we get basically a higher low here, and then it turns up and we get another higher low here. So and then again it went sideways, but for scalps these work really good, you know. So I would you're looking for only 4 bars on the lower time frame here to take a trade. So, and of course, anytime there's double dojis next to each other, the market usually stalls or possibly reverses, pulls back. Also at the highway, the market stalls, usually pulls back, and especially more so on the higher time frame than the lower. Why is that? Because the higher time frame will give you more of a visual of the longer term traders and what they're doing. So the short one will give you the same information, it happens a lot quicker, and you have to be a little faster on your game, right? So anyway, so the double bottom there, and we can move this forward a little bit more, and you can see, I mean, we had a little head and shoulders, and we have the stall over here on the double dojis, and you can see the market went up and down here in this section, right? No divergence here. We did have divergence on that very top one. It almost made it back to the open. And so it's creating a triangle, right? So basically it's going sideways, it's creating a trading range. It's a triangle, it's looking for a breakout. Do you try to take the breakout? It's better to wait for the breakout to happen and then it to come back, and then take that next trade down to at least try the lows. And see, this little two-legged move down became that. And this is a good place because, see, underneath the Xroc here on our indicator happens, right? So we come underneath the Xroc here, comes back up and comes back down. So that's good reversal, especially we're under the highway here. We come back up, we bounce on the highway, and then we take that move down. Now this is a good move here, and if you were trying to get in this move, you could look at the same move over on the smaller time frame if you see that setting up. And you can see that that's right here. You see what happens here? It's going sideways, 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 and then it finally makes this little move down back under the highway here, and then you get this third bar tail right here, and this is a good indication that it's gonna take off. So, and that's usually what happens. And so you could have popped into that, and that, you know, right there, you're just giving you a 60-point little push, and maybe you'd probably easily get 50 down to that low, even if you didn't, I mean, yes, you were thinking, hey, this is going to go all the way to these lows down here, but to this red line, but it didn't quite make it. And so there was news also, I think at 7. We're kind of waiting for it. I think I posted in the chat also that, hey, they were going to go for a breakout. And then, of course, I said also that it's likely it was going to be a false breakout. So it broke out of those lows, as you see that red line right there. And then the rest of the day, I think it went up. So not to say that I'm right, but I'm just looking at larger time frames than this. When you're talking about creating some type of daily analysis of what's going to happen, but that doesn't really help you for trading. It just, maybe helps your your idea of which direction you might want to trade in if you're going to try to hold something. So this move back up here, again, this moves back up, and you can see that the longer time frame, our Xroc is underneath our midline, so that means there's more selling than buying going on. And so anytime it starts to make a move, you're going to look for a two-legged move. So if it makes this move down, it bounces, and then it doesn't double bounce and go back to those highs here, then you know that if it turns back down, you're likely going to get that second leg down. Also, this is a good trend entry. So all trend entries are, as their blue and green come underneath our Xroc and then they turn back down. And usually we'll see that happen right here at the highway, and then we get that entry bar down, and you get, that 40 or 50 point little move. And sometimes those can turn into hundreds of points, but that only happens once in a while. You can't bank on that every day, unfortunately. You could try, but there's lots of people that blow up their accounts trying to do that, so not something to really think about. So here, at this point here, you can see that we had a trading range. It bounced under. You get a little bit of a double bottom there, and you could even counter trend that divergence there. But at this moment, you would probably be looking for this to attempt to touch those lows and break out, because it already broke out. So you're looking for, there's trapped sellers down there that are looking to get out, and there's more buyers below those bars, so they want the market to go down there so that they could buy. Also, we have a nice buy gap here, which is a really good place to take a long no matter what. So as soon as we get a reversal bar, we take a long. This reverses here, you're going to hold long, and you might get 40, 50, 60 points out of that little move there, if you understand and take advantage of these gaps. So all right, so and then we get a move back up, and then it tries to go back down and fails. So you should understand, on the higher time frame, if it's failing, then that means we want a second leg up, and so that's this area here, right? So these double dojis, and so then we get this bar that tailed out right there, has a tail on the bottom, and then breaks out of the dojis. That's a good place to go long, and so this would be a good scalp. Actually, it double dojis and then continues, but on the higher time frame, but you're most likely going to get a scalp. That blue span is coming into play. You can see, if I roll this back a little bit, you can see that the double doji right there, because it touched the span, pulled back, and then it decided to try to go through. Same thing here. Touched the span, decided to go through it. So we're most likely going to come back up to that yellow span, and then whenever you see that pink span start to come into your chart, if it's visible, it starts becoming a magnet. And so, but usually it'll go blue, yellow, green, pink. So when these are out of order, that's another thing to take into account, because this is the pink is a higher time frame, a larger volume count. The green is the second largest, and then yellow third, and blue fourth. So they should be in this order as you see here, but sometimes they get mixed up depending on if the market is going sideways or reversing. So you can tell we get a gap here, and then off of that gap it starts to bounce, and this could give you another opportunity to go back to the open, or again to the yellow span, likely to the open. Probably going to stall around these dojis here, so that 41.99 or something. So, and it kind of grinded its way out here, going up. So any trade off of this gap here, here you get a double bottom. here you got a double top, but I would not try to trade back through a buy gap, no matter how small it is. I would wait. So if you took this trade, it bounced, maybe you didn't get clipped on that, it looks like you would have just missed your stop, and then it would have popped out a couple bars there and then go sideways again, and then it finally came off. So it was a grind. It definitely it's a total grind here. And then here 7:30, it looks like it kind of finally made its little push up. So and look, you see it didn't quite go all the way to the open on the higher time frame. It rolled back over, came to the highway and that span again, and you can see that's in the future. So that's up here. So it came back down. This would be another spot to go long, because this is the span, the highway here on the higher time frame, and also you're back to that spot. So where do you take the trade? Well, I always say to myself when I'm trading, not that I always do it, but I try to, is that if I'm seeing an area where I want to take a trade, I usually say I want to see the smaller time frame double bounce, because it pretty much almost always does. Not almost always. So if I see an area on the higher time frame that I want to take a trade, I wait for this little, look at this little double bounce right there. So this is that same area. This came down, hit it, popped up, came back, hit it again, and you got a little bit of order flow divergence there. You don't really have much on the relative movement or convergence divergence indicator, but still it is, like I said, a good spot because of what you're seeing over here on the higher time frame, and as well it's the buy gap. So the buyers are going to defend there. So when you see that double right there, that's usually a good place. And look, that would have been a nice clean movement there as it came up. And this thing really, once it doubled here and failed on the higher time frame, see how it doubled and failed, came down, hit the highway, and then it came back. I mean, that would be probably the best spot ever to get into the trade. So where could have you done it? Well, maybe here, maybe you get that second push up, fails to go lower here, turns back around. It would have been some risk to think about that. But if you waited until this bar doji, or you got that secondary bar that clipped up right there, yes, you're getting in late. Maybe you take the trade there, but maybe if you see the open right there, maybe you wait for it to pop off the open and then try to push itself back through. It just depends. Usually I might take a trade and just clip that off at the open, just take my small profit. Then I look for the pullback, and I look for this smaller time frame to try to break out. Well, this is a trade setup in most cases, is whenever it does this double doji, whenever it does that and it puts this next signal bar, it breaks out, those are usually really good trades, and you can see them, they're everywhere. I mean, this is a really good trade. Well, that looks terrible. Why is it doing that? But let me do this. So we get this double doji right here, right? And then it has a signal bar. It goes. I mean, you can pick these up. Well, now this one didn't go. That one double doji in a single bar, and it did not go. This one is the same. But again, I want to state the fact that you don't want to trade through the highway. You want to wait till it gets above it or below it, and that's just usually a better game plan than trying to trade through it, because basically what you're having is a trading range, right? And then you want who's going to break that trading range. Well, usually whoever's in control, and whoever's in control is going to be whoever's on whatever side of this band that we have running through our chart here, because that's what that highway is telling you, is that the volume or the averages are up or down, right? So so this could have been a good place to go long here onto the small chart. And again, these are all just ideas. I mean, not that you could take any of them or all of them, it doesn't matter. But it blows right through our yellow span, as you see, and it's heading again for that purple or magenta span, which is on our chart, because it's coming into play. Also, with the YM, it's very important to understand that the opens are critical. So whenever it hits an open, usually I'll short it, no matter what. I'll short it right 1 bar or 2 bars after the open. I'll short it, and usually I make a profit on those. So, but you can see up here, see the trading range, 2 dojis. Look what it did here on a smaller time frame. This is creating those 2 dojis going sideways, right? So the higher time frame just gives you a cleaner look at it, and like I said, you could create great trading plans off of that. And so again, here's a good spot in regards to looking at coming off the span here. So, and you get here's a double as it comes off the span, pops off the span, then it kind of tries to go back up, and then it pops off of it again, right? So you get this 1, 2, 3 little pushes trying to get onto that, and then remember we got a gap bar now right here, and that actually put in play right there, 750. So basically this gap bar is here, so the market hits that open, shorts off of it, and where does it go? It goes right back to that gap bar, I'll guarantee it. And actually it looks like it pushed through it just a little bit, right? And that's the same thing. So it's just giving you a really closer look at these markets. And again, you could have bought that right there and it was a scalp. If you were going for a big win, you wouldn't have got it. It was a scalp. Again, we're underneath the highway. It's going back and forth across our rate of change, so nobody's controlling. But over here on the higher time frame, we are underneath the highway, so you would try to short, because we're underneath our rate of change. And so you would at least try to get it down to that 50, and this actually went all the way back down to the 30, and then it got a double bottom there, and it has divergence, and this would be probably the place where it starts to head back up. And then once we get above our Xroc here, you want to start buying. So you buy off of that span again, you buy off of the next one, and you could utilize that on the shorter time frame. So you could buy this span here. You could have even bought that for a scalp back to that low. This would have been a good win back to the low. That could have been a good win, the failure, and then maybe back through to the open. You might get a pretty good run on that one. And if you caught it just right, you could have got a bigger win on one of these. So, but that takes us through 9 o'clock. Usually I only trade for 45 minutes, and that's my trading plan. And so hopefully that you get a little bit of understanding of the higher time frame to the lower time frame, and how you could kind of utilize those, which I try to do a bit, because some days I get some big wins and some days it makes trading a lot easier. So, all right, I hope that helps. See you guys on the next one.